if someone asks you right now to show them your business, okay, not explain it, not tell them about it, but actually show it to them, okay? The income, the expenses, where the money went. Could you pull that information up? All right, welcome everybody. Welcome to another session of the Tax Life. I am your host, Jeffrey White, tax and business strategist, and I am coming to you tonight with what I believe is a super topic. It's really, really important. It's something that has been on my mind for years, to be honest with you. And as a tax preparation specialist over the years, I run into a lot of clients and people that have small businesses, even some big businesses. And what I notice across the board is that there's some things that a lot of the businesses, from a best practice standpoint, a lot of the businesses don't adhere to. So I was talking to one of my teammates, and we have been talking over the years about how can we help small business owners in general, maybe people that are starting side gigs. How can we help them to stay out of trouble with the IRS and establish some best business practices to run their business? So I've been thinking about it. And last summer, I said to myself, I'm going to try to put together a paper, and it ended up being an ebook, but it was about some of the things that the IRS looks at that small business owners need to know in order to do well if they were ever reviewed or audited by the IRS, right? So got last summer, took some time, wrote a little bit every day, and I actually did write an ebook, and the ebook is called Legit or Hobby, the 9 factors every small business owner needs to know, okay? And so what we're starting in this session is a 9-week series which goes through each one of the factors that the IRS looks at that every small business, or it keeps saying small, but every business owner needs to know and have in place as a best business practice, okay? And so tonight is factor number 1. Factor number 1 is your books, your records, and your systems. And I believe this is super important because, again, I run into and encounter a lot of small businesses that are operating their businesses, and they're doing really well and making money and profitable. But when you peel the onion back, you see that their back office things and their administration is not very good, and it jeopardizes them and puts them in jeopardy if they're ever audited. So I think this is super important. If you know anybody that's got a business and you think that they might benefit from this, let them know. All right. So let's get started. I want to talk about why your books, your records, and your systems are super important when it comes to the IRS, right? But first, I want to ask you a real simple question, especially if you're a business owner. And these days, a lot of us are business owners, including myself. But if someone asks you right now to show them your business, okay, not explain it, not tell them about it, but actually show it to them, okay? The income, the expenses, where the money went. Could you pull that information up? Okay, that's what this is about tonight, all right? Over this next 9 weeks, I'm going to be walking you through exactly how the IRS evaluates whether a business is real or just a hobby in their eyes, all right? And this matters more than people think and more than they realize, because if they believe and if they determine that your business is a hobby, then your deductions go away, your write-offs can get reversed, and then you're going to be stuck with a tax bill that you weren't expecting, and it's going to be really painful. And I know this because I've sat in the IRS with clients who have experienced this. Okay, so tonight and in these next 9 weeks, I want to make sure that I can provide you with some information and even some things that you can use personally to look at, so to make sure that this doesn't happen to you. Okay, so I want to start off by sharing a story. And this story is indicative of a lot of the clients that I have come across over the years that have businesses. Okay. And most of them are small businesses, to be precise. And I've seen this story play out more times than I can count. And it's nobody's real fault, because most people that start businesses, they start the business because they are a technical expert in that particular field. You know what I mean? You might work for somebody and you gain some knowledge and some experience, and you become good, and then you decide that you want to go out and do that thing that you've learned, that skill set that you've learned, and you want to do that on your own, and then you go start a business. And you operate that business, and you might even operate it better than the person that taught you the business. Um, but say for instance you don't have a bookkeeper and you don't have a business consultant. What are you gonna do? Okay, so in this example, in this story, I've got a client. Her name, let's call her Jasmine. All right, Jasmine does hair. She does really good hair, as a matter of fact. She's very talented, and her clients love her. She's always booked. All right, and weeks in advance. In fact, all right, she's pulling in usually about 2 grand a week, very talented, okay? But she collects her money primarily through cash, Cash App, Venmo, Zelle, okay? And from the outside, if you're just walking by her shop, from the outside, everything looks great. It looks like a thriving, as a matter of fact, it is a thriving business, okay? But here's where it gets complicated, all right? She books her appointments through her DMs on her phone, all right? Like I said before, she gets paid through the apps primarily. Okay. She's moving fast. She's got clients coming in, clients going out. Okay. And typically, when she first started with us, every tax season she would come in and she would need to gather all of her papers that she had, or go through her phone and look at her records and her text. And it was a mess. It was a total mess, and we had to help her in some kind of way. And it wasn't because she wasn't working hard. I mean, she was grinding, and it wasn't because she was making money. Like I said, back then when we first met her, she was making 2 grand a week, and even now she's making even more. Okay, but the problem was, and the reason why, you know, her systems weren't really together, it was that she wasn't capturing what her business activity was. She wasn't capturing on paper what her business was doing. Okay, she had no invoices, no expense logs, no real record that was systematized of what was coming in and what was going out. Okay, and for some of my clients, as long as there's money in the bank, then they're fine. But that's not how the IRS looks at it. And the IRS looks at it like, if there's no way to record this stuff, they don't care how hard you work. They don't care how much money you make, unless they can tax it. They care about what you can show them on paper when they ask you. Okay, and that basically was Jasmine's story when we met her. Obviously, since she's been with us, we've helped her through the systems that we're going to talk about tonight, and looking at these 9 factors, and making sure that she does her best to implement them in her business as best business practices. Okay, so what is the IRS looking at? What are the factors? Okay, what are some of the things that when they review your business they're looking for? In this particular factor, books, records, and systems, they're really just looking for 3 things. They're looking for where the income come from. Okay, where did the money go from an expense standpoint, and then they're looking at, is there some type of system that connects the dots, so to speak? Okay, some system that tells your story financially in your business activities. Okay, that's it. No tricks, no complicated formulas. They just want a clear, consistent picture of your business activity. Okay, and I can tell you firsthand that a lot of business owners cannot do that. And when it comes time to get a review, they're scrambling, and they're scrambling pretty seriously. So, but if you can show that and you have a system, then you're protected. Okay, and that's what these sessions are going to be about. If you can't, things get murky, and when things are murky, you're looking and you're in for trouble. Okay. Now, I want to talk about some remedies. Over the last 6 months or so, even longer, we've been talking and explaining different terminologies and different frameworks and even different systems within tax life. And one of the frameworks we talked about is called the taxpayer evolutionary journey. Okay, you've seen me do this before in some of the other sessions. Okay, the taxpayer evolutionary journey is basically about the 5 taxpayer identities when it comes to what type of taxpayer are you. Okay, and you start off in the low stages, and then you move your way up as you move along your journey, right? So tonight, in this first factor, we're going to talk about just 2 of these taxpayer identities, because if you're not keeping good books, if you're not keeping good records, if you don't have a system, then you're definitely in the lowest of the stage, which is called the tax filer. The 2 we're going to talk about in this session: tax filers and tax recorders. Okay. So the tax filer, we've talked about this before. Tax filer waits until tax season to get their records together and think about any of this stuff. All right. And then they're, like I said, when we first met Jasmine, they're scrambling. Okay. They're trying to reconstruct their business accounts. They're trying to get bank statements to us. They're trying to work off their memory and their recollection. And to be honest with you, I think that's the typical business owner. All right. They're so engaged in the operation of the business that they don't take the time, in a lot of cases, don't have the interest to do the back office things. And they may not even have the expertise, to be honest with you. And that's okay. Okay. But they're scrambling and looking through bank statements and looking through their phone for text and trying to remember things. And they feel stressed every year. All right. But then on the other hand, there's a tax recorder. Okay. And that tax recorder is the next level up the journey. Okay. Here at Tax Life, we truly believe if we can get you tax filers out there to move up one stage to be a tax recorder, your tax life, your financial life, and then even the people that you work with to help you in your finances, your financial planner or your tax professional, their life will be better as well. Okay. So the tax recorder, they track their income as it comes in on a weekly basis, even. Okay. They track their expenses when they're happening. They don't wait, and they don't wait till later to track the expenses. All right. The tax recorder, they keep their receipts, all of them, and they record them and they organize them, and they're ready to be presented if ever asked to verify business expense. Okay. They're calm because they know that nothing that comes up to them, let's say if they went to an audit, will come as a surprise. Okay. Now here's the thing I want you to really listen to and hear. All right. When we talk about tax filer and a tax recorder, these aren't 2 different type of people, but they are 2 different types of habits. Okay. And tax life is about transformation and getting you to go from poor habits to good habits. Okay. And these habits can start tonight in this session. All right. So what does it look like to build a system or to have a system that tells the IRS that this is a real business. 4 things. That's it. In this particular factor, these 4 things will show the IRS that you have a system in place. It's not the full complete system, but it's the start, and it shows them that you have some clarity in your business dealings in the back office, not just in operations. Okay, 4 things. Okay, first thing, number one, you gotta separate your money. All right. It used to be that I would tell clients you need to get a business account. I kind of tapered off on that a little bit. You just need a separate account. It doesn't even have to be a business account. A business account is better just because it's showing more credibility with anyone that you do business with and the IRS, and it can start you on your way to building things like business credit. But as long as you have a separate account that is separate and distinct, and one is for your personal affairs and the other is for your business affairs, that's a start. Okay, that one habit gives the IRS so much clarity, enormous clarity, because they know that you understand the distinction and you're not commingling personal monies and personal expenses with business monies and business expenses. Okay. Number two thing they look at, they want you to see how you track your income. And my suggestion is to track your income weekly. All right. And I know some people think that that's an arduous task, but it's not. Okay. And I'm going to actually provide you with some things that help you later on. But don't wait to track your income till the end of the year. All right. Or not when you remember, or okay, um, once a month or something. Do it once a week. Okay. And log what comes in. It's not difficult. I had a client, and she used to keep all her records on a legal pad, the yellow legal pad, and it was totally and perfectly uh, comprehensive and consistent, and told her story about her business activities. All right, you can do this once a week. Takes 10 minutes, 20 minutes tops. All right. Number three, again, you want to save every receipt. Okay. Some of the receipts might be personal, some of the receipts may be business. In some cases, you might be able to leverage a personal receipt that has a place in your business. Okay, you never know, but if you hold on to all receipts and track them, you'd be okay. Take a photo of the receipt. Okay, if you go to dinner with a business client, write on that receipt, I went to dinner, and write their name down and write what you talked about in the business meeting. Okay, and then scan it or copy it, or like I said, take a photo of it and then send it to a particular email folder. Okay, then that folder just might be like a folder that says receipts, 2026 receipts, or whatever year. Okay, something as simple as that, and you might within that folder have subfolders by month. All right, or you can put it in an app. There's um, apps that scan receipts and then organize them for you. Okay, do whatever works for you, but just do it and save it when it happens. Don't wait. Don't collect them in a shoebox. You know, which I've seen. Do it right then, right now, before you end your day. All right. And the fourth thing, and you want to do a monthly review of the things that you've done week to week. All right. Sit down once a month and look at your numbers. Look at your income. Look at your expenses. Look at your checklist if you put those together, and see if everything that you've done in that week makes sense for your business activities. Okay. You do this not to stress out. You do this to actually relieve stress. Okay. Reduces stress. Okay. When you know your numbers, what's coming in, what's going out, hey, is there something left over called a profit, or are we operating in the negative, okay, which is called a loss? At least when you know your numbers, you understand more and you can make better business decisions that way. Okay. And you're not operating on emotion or you're not operating on what's in your bank account, and you're hoping that this bank account balance is enough to take you to the next month. Okay, once a month, review your business numbers. All right. I believe this is simple. I know it's doable. I do it myself. Okay. And if the IRS comes and asks for this, and they come a knocking, okay, you're ready. All right. Before we end this session, okay, I want to leave with this. Okay. Remember, this is a 9-week series. This was the first factor. We looked over and talked about this first area the IRS looks at: your books, your records, and your system. Okay. It's not rocket science. And I know you can do it. Okay. It just takes the intent, and then it takes the action. Okay. And I want to leave you this. This is not just about taxes. Okay. This is not just about the IRS. Okay. If you don't track your numbers, you're guessing. And being a business person myself, I've learned this over the years. When I know what my numbers are, I make better decisions. Okay. When you don't know, you're going to always be reacting. And as a a a person that is trying to help you to transform from a filer to a recorder, okay, we want to go from being reactive to proactive. Okay. When you don't know your numbers, you feel uncertain about your business. Okay. But on the other hand, when you do track your numbers and you understand your business more, you make better business decisions and you feel in control. And when you feel in control, you're gonna be less stressed. That's just how it works. Okay. Getting these 3 things down: your books, your records, and your system. It's the difference between running your business and having your business run you. All right. You want to run your business. You don't have your business run you. All right. All right. So if you've gained anything from this session, even just one thing that you can think about in relationship to your business, or one thing that you can share with somebody else that you know has a business, okay? Or even better, one thing that you think you can fix, I want to hear about it. All right. In the comments, drop systems. Yeah, write the word systems and shoot me a comment now. That tells me that you're ready to start building a system. And if you send that to me, I'll even follow up with you personally. Okay. All right. So to summarize, if you're ready to start building a system, yeah, go ahead and give me the comment, system, and then get ready for next week's topic number 2. Okay. We're going to go deeper. We're going to talk more in this series. And I'm excited about it. And the weather's getting better. I'm excited about that as well. Before I go, I want to give some shout outs to some of my clients. Obviously, I want to shout out to Pat. I want to shout out to Mr. Larabo. All right. I want to shout out to Matt. I want to shout out to Scott. I want to shout out. I appreciate all my clients that keep coming in. I want to shout out to Faison, and we got some new tax planning clients coming daily, and it's just exciting to see how the message is coming and getting across. We don't have a lot of people comment, and I really want to start making this more interactive. But I also know that when I sit down with my clients and do tax interviews, a lot of you guys are telling me that you're reviewing the videos on YouTube, and you're going to the and watching these live sessions. And so just want to show you and tell you that I appreciate you so much. And again, if you've gotten anything from this, let me know personally. If you got any questions, comments, let me know. I'll answer them personally. Okay. And again, next session, we're going to be moving in factor number 2. And we're going to go deeper and deeper all the way through. And then at the end of the 9 weeks, I'm going to make my ebook available to all you guys free of charge. All right. So stay with us, keep following us, and as usual, I like to end these sessions with asking you the question, what's your dream?